You all know that Bitcoin has crashed again. But here is the big question. Who is actually selling during a crash? Is it small investors panicking, leveraged traders, institutions, or miners? It's not just one group selling. It is a mix of people all reacting for different reasons. My name is Archana and you are watching Finotech Elite, a channel dedicated to financial management, investment analysis, and smart decision making using technology. If you like my video, don't forget to like and subscribe the channel. Now, let's dive into the Bitcoin crash and take a clear, honest look at crypto market. No hype, just reality. I'm talking about hidden bearish divergences, 80% profit surges that historically trigger sell-offs, and a bear flag pattern that could send Bitcoin down to 55,000 US dollar level. The market was flooded with 2 billion in leveraged longs. Traders pushed their luck too far, and the data now pointing towards possible major crash. In this video, first we will learn about the crash, then about 5 factors which trigger the crash, then Bitcoin pattern in direction for short and long term, then going to walk you through the 3 critical warning signals that everyone else is not considering. By the end, you will know exactly what's coming next for Bitcoin, how to protect yourself. Now first, what is crash? When prices fall from 10 to 30% or even more within days or even hours, that is crash. That sounds extreme in stock market, but in crypto, it happens because the market structure is different from the stock market. Now come to the factors behind the Bitcoin crash. Now first is limited supply. Second factor is global speculation. Third one is 24/7 trading. Fourth one leverage. And fifth one emotional investors. Now come to the first factor, that is limited supply of Bitcoin, which makes the move more violent. Bitcoin has fixed and maximum supply of 21 million Bitcoin and same cannot be increased. That sound like it should make price stable, but it actually does the opposite in short term. Why? Because when demand disappears, there is no central bank which is stepping in to stabilize Bitcoin price. So even wave of selling can push the market down fast. Now, the second point is global speculators react instantly. Bitcoin is traded by millions of people worldwide, most of whom are speculating on price, not using it for daily payments. When bad news hits the market, then there is a regulation scare, stock market drop, and a big exchange problem. Speculators rush to reduce the risk at the same time. Selling becomes contagious and market drops fast. Now next point is 24/7 trading means no time to calm down. As you all know that stock market closes but Bitcoin doesn't. When people get scared, there is no break for them to calm down. Selling pressure can build for hours without interruption, turning a dip into a full crash. Now, the fourth point is leverage triggers the real crash. Leverage means borrowing money to make bigger trades, which can boost profits but also wipe you out fast. Many traders use leverage, that is borrowed money, to make bigger bets. Leverage triggers the real crash. Here things really accelerate. When price falls, traders who borrowed money start losing fast. Exchanges automatically close those trades. That forced selling pushes price lower, which forces more traders to be sold out. This chain reaction is called a liquidation cascade, and it's often the real reason crashes become so sharp. Now, fifth point is emotional investors join the panic. As prices drop fast, the regular investors see red candles and think, get me out before it goes to zero. So they start selling, adding even more downward pressure. Finally, the role of big whales comes in picture. Whales are individuals or entities that hold a very large amount of Bitcoin, enough to influence price when they buy or sell. So are whales selling too? Sometimes yes. Large holders may sell to lock in their profit, manage the risk, trigger the liquidity. It's often not whales causing the drop. It's forced liquidation and waves of emotional selling. Now I will show you total distribution of 20 million bitcoins. The largest individual holder is Satoshi with approximate 986,000, which is 4.6% of the total bitcoin holding in the crypto market. Other individuals are holding approximate 65.1% of total holding. Balance is with businesses, funds, ETFs, and governments. Selling by these big whales causing big fluctuation in the crypto market. Now I will explain about the Bitcoin pattern. Here you can see Bitcoin chart showing the data in candlestick pattern from year 2018 to 2026. Bitcoin is making different patterns in span of 4 years and repeating the same. Bitcoin has a history of violent corrections. Like the pattern were made in 2018 and 22 crashes with maximum fall ranging up to 77% from the peak. Same pattern is being followed in current scenario after span of 4 years. In 2018, the price dropped from 19.9k to 6.6k. That is 66.7% from the peak price to the lowest price. Similarly, in 2022, the price dropped from 69.4k to 15.9k US dollar, which is approximately 77.1% from the peak high to the lowest point. Same in 2026, the price has dropped from 126k to 60.2k US dollars, which is approximately 52.2% from the peak price to the lowest price. The fall is continuing, which may go to 35 to 50k range if same pattern is followed. Then buying may start if the value is going 50 to 60k range. The cycle could last from days to months, and further 10 to 20% crash may happen before the market starts to recover. Now we will see the Bitcoin direction for the downfall to continue or bounce back. The major indicators for same are volume with downfall. As clearly visible whenever there is downfall, then the volume has gone up. Means the downfall is supported by volume, the downfall will continue. When the downfall is there but the volume are very less, means the bounce back may come or bottom out may happen. The same can be confirmed by bullish reversal pattern like Morningstar, and further by continuation pattern like three white shoulders. These patterns are supported by the heavy volume that can be buying opportunity. For that pattern detail, you can see the candlestick pattern video for bear and bull trends. Now we will learn about the three major indicators which are being formed in the market. The first is leverage trap, second is bear flag pattern, and third is momentum signal. So the first one is leverage trap. During the crash of Bitcoin from 6th to 10th of February 2026, prices went down. Everyone was nervous. From 12 to 15 February, the prices went up by approximate 10%. which indicated the bullish signals. Everyone started buying. Future trades of approximate 2 billions were made fresh leveraged position in just 2-3 days. As majority of traders were betting for the prices to go up, this is called leverage trap. When Bitcoin becomes leveraged in the upside, then small drop in price can trigger cascading liquidation, pushing the price further and further down. Now the second indicator is bear flag pattern. The crash happened in bear pattern and which may pause the next bear flag pattern. Recent upward movement was rejected by the upper limit of the flag. Then the next wave of selling after liquidation of levered position may come, and same can be more violent. And third indicator is momentum signals. In the first and second week of February 2026, the prices made lower high while RSI made higher high, which indicates the buyer losing the strength, signals a potential trend reversal. Net unrealized profit loss surged by 85% just in 10 days. Means the investors moved into the profit and may begin selling to lock the gains. At this level, the likelihood of crash is very high. So above three indicators in the market are signaling for the downside. If you're holding Bitcoin, monitor the 63,200 US dollar, 58 4,000 and 53,300 USD levels closely for the downside movement. Also 65,860, 68,850 and 71,230 USD level for upside movement supported by volumes. If you are trading, wait for confirmation before entering the positions. Take buying decisions if support level breaks. Avoid using high leverage in the current market environment and manage your risk carefully. So this analysis does not suggest that Bitcoin is going to crash or boom. However, current data shows extreme warning signals to include the bearish divergence, profit surge, leverage buildup, and bearish continuation pattern. Markets are unpredictable, but based on current technical indicators and pattern, caution is strongly advised. Thank you for watching the video. Please like and subscribe the channel so I can make more and more video on financial management and investment analysis. Thank you for watching.